Well, hello members, I want to bring you up to date with what we're doing and what we have done. Yesterday we had a huge spike up in the GDX, and as you know, we got long the GDX a couple days back. Actually, we got long yesterday. And the reason for it is that it undercut less volume, looked like it could reverse. It was coming into this bar, and that's that was about where we got it. So we ended up taking a small loss on this. The question is why did we leave before the Fed? And the real reason it wasn't so much this chart, it was the fact that we were already in other commodities that should benefit. For example, KMI, we were also in Rio. Those, along with this, gave us total exposure, right? All of our exposure actually in the portfolio was tied to the rate hikes being pulled back. And it wasn't clear that that was going to happen. So in other words, we had a lot of risk on in one area. And if it had gone the other way, then we definitely would have seen this pull back into this bar. At least that would have gave us a better entry. And so what we did was we took it off here and said, okay, let's see if it comes back some more. We'll buy it smaller, at a lower price. Didn't happen, right? Fed turns around, does the other thing. Here we are back up at the high. So, this is primed to try and break out again. Now, whether it does or doesn't really depends on what gold does. Gold is up again today. Gold's going to try to get back over this bar again, 120.84. It's at 120.59. So it's not that far away. It will be over this morning. If gold has consolidated long enough, right, then gold's going to make the push finally and go to a higher range. I don't know if that will happen. We're going to monitor it. If it looks like it's really going to happen, then we'll try to put on some more exposure somewhere in the groups that are going to benefit from the Fed policy, which is, don't raise rates. So we'll have to look at that and decide. If we look at the other stocks in the group that we are in, they continue to do well. The Rio, remember Rio had got hit, was underwater. Well, today it's probably going to peak back above where we bought. It got the big spike up yesterday on the Fed news, and it's going to try to push back up into that higher area again. Now, as part of moving some of that risk off of the commodity trade yesterday, I moved into the SPXU, and what I was looking at really is not this chart. I just pulled the SPXU up so that you could see it, but it's down here at the bottoms, right? The real issue is on the S&P 500 chart itself, and that is that it's coming into this big bar. That push up has brought it up almost to the top of the bar. 2040 was the top. It got as high as 2032. So there's about 8 points left. And actually overnight last night, it actually went up there and tested that in the futures in terms of being up about $7-8 overnight. This looks like it's going to pull back. Now, it might have been a better trade to step over instead of here to step over into the Russell, because the Russell is the one that's been struggling. And I may actually put some Russell on if it breaks this ledge here. And so we actually have, if you look at this closely, you kind of have this ledge that's formed. And the Russell is probably going to be the weakest one on the way back if oil turns around. Swing point high is going to be the target on the way back. All the indexes are going to drift back in if they come back in off this Fed bump. And so the idea was, we have some of the commodities on. We switch over. I made this trade on the push up yesterday off the Fed news on that SPXU. So in other words, bought it as it was retracing because it's a 3-to-1 inverse of the S&P 500. And so the ideal here is that this, could retrace in. The actual target on this particular contract, is this big bar. It's either the top of the bar, which was the low from yesterday, or the bottom of the bar to start with. And so it would be a quick flip type trade, potentially reshort either with this instrument or some other one, depending on what's going on at that time. So that's it for today. That's where we're at. That's what we're doing. And I did talk with my colleague Fraser this morning, and we were looking at the DBA today, and this one is starting to look interesting as well. So that's something I'll do some more work on today. We'll see if it makes sense to make a trade on. Thanks.